Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stock markets wrapped up last week on a positive note with both the S&P and the Dow Jones hitting record highs after a fifth straight week of gains. The catalyst for Friday's rally was strong bank earnings, with JP Morgan rising 4.4% and Wells Fargo gaining 5.6%. Meanwhile, Tesla fell 8.8% after its disappointing robo-taxi event. Friday night's economic data showed PPI flatlining in September, but August revisions higher raised the annual rate to 1.8%. This week, the focus will be on earnings reports from other major banks and Netflix, as well as speeches from Fed officials and retail sales data as the market seeks more proof of a soft landing. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where they are as we start the new week. Okay, so with the NASDAQ now hitting its highest level since mid-July, we have a lot of interest in whether it can take out this 10th of July, 20,690 high. Now, my view is that while it holds above this 19,600 to 19,500 support level, swing low if you like, I think there's a good chance that we can continue higher up to retest this all-time high with scope up towards 21,500. So in a nutshell, the key level for me is this 19,600 to 19,500, which is a level we've spoken about before. If it were to break below here, then I think we start to look at some downside levels, potentially coming in around this 200-day moving average, which comes in 18,560-ish, and of course this 18,400 low from September. So that's your first band of support. It is, of course, being reinforced by this uptrend support from the October 2023 low, which comes in a fraction above 18,000. Turning to the S&P 500, a fifth week of gains closing at fresh record highs. And like we try to do, we have highlighted a very important support band coming through here. This is the 5670 to 5650 area. And we spoke about this level in our last video update in late September. We said, while it holds above here, then there's a good chance we push up towards 5,800, which it has subsequently done. Now, I think our view will stay quite similar in that respect. While the S&P stays above this 5670 to 5650 support area, then I think there's scope for another leg higher up towards 5850, potentially towards 5900. What we do need to be mindful of is if the S&P 500 were to see a sustained break below this 5670 to 5650 support area, then we also have in place some bearish RSI divergence, which is where price is making a new high, but the RSI just isn't confirming it. And I think what you would see, putting those two things together, a break of this support and this bearish RSI divergence, you would see a pullback at least towards this September low coming in around 5,400, potentially down towards this 200-day moving average coming in around 5,279. Thanks for listening and have a great week ahead.